Hi, I'm Peter Rose, founder of Longwood Currency Trading. Should a Forex day trader make position trades? That's a topic I want to discuss today, and the reason is I had a student actually ask me this because I teach day trading and I'm a day trader. That isn't to say that I won't take a position trade or I won't scalp or I won't, whatever. The question becomes, what's your experience and what's your background? The reason that I teach day trading is because it's the perfect environment. You trade enough times so that you can develop some good trading metrics, which you wouldn't be able to do if you were taught how to position trade. These guys are telling you how to get started in trading by going up on the daily chart and checking your charts once a day. Go to work, put your position on when you come home, look at it in the morning. All that stuff. To me, that's crazy. There are times when you're going to do that, but that's not the point of this video. Should a Forex day trader make position trades? We want to narrow that and chat about that, and hopefully answer the question to other people that question to other people who may have that thought in their head about making that transition. It's a beautiful day. We just it's end of Feb 2026. I just got through a snowstorm last night, 5 inches, and we have maybe a foot coming on Monday. Something's creeping up the coast. This won't be published until probably after that storm, but regardless of that, we're waiting, and I'm sitting in front of the fire because I just got in from snowshoeing out back with Sue, taking a walk through the woods with Bo. It was snowing out. It was very pretty. And I happened to think about a conversation that I'd had recently with one of my students, and they had asked me that question, and I thought, well, maybe that's a good topic to cover in a video, because I think day trading is misunderstood. You're not just a day trader. You simply choose that because 99% of the people I'm talking to anyway have a job and work, and so you're not going to if you think you're going to be able to trade long-term position trading successfully, I don't think so. You could be up on the daily chart. That's fine. You're trading the major pairs, so you got an ATR of anywhere from 80 to 120 pips a day on the daily chart. So what do you want to do? You want to have to set your stop 200 pips out because you're looking for a 400 pip run? Go look at your chart and see how long it takes to make 400 pips. And it doesn't take that long if you're able to catch that run, perhaps, maybe a couple of weeks. But look at the retracements that price has. I've tracked stuff like that, and there have been retracements of 200 pips in moving those distances, several times 200 pips. So what's your tolerance for pain? How much money do you want to lose? If you day trade, you could lose, I don't know, 8 pips 4 times and win 10 pips 6 times, and you're way ahead of the game on a 10-trade basis, a 10-day basis. And you have total control. And at the end of the period, you work, so you could trade a couple hours or an hour in the morning. That's what I teach in my fast track course, how to organize your trading plan so that you can trade effectively for an hour or 2 hours in the morning before you head off to work. Or if you want to catch the Asian session, depending on when where you live, you can get home from work to have dinner and trade that session. But in the day trading environment that I teach, it's a 1 to 2 hour period of time. You're not going to make 400 pips in 2 hours. However, if you end up with a runner, and a runner is a price that moves beyond your profit target for that day, you could float a stop behind that price and let her go and see how far it goes. And I teach that in the fast track course toward the end of it. Because if you're too eager to set that limit stop, floating stop behind the price, that could very well come down and you'd lose more money than you might have wanted to for the profit target that you had and the risk management that you have involved. You have to balance this stuff with your long-term metrics as to what you're comfortable in doing in assuming risks. If you have a 10 pip profit target and your price goes to 12 pips, that's not exactly a runner. So if you were to set a 10 pip float stop behind that, you'd be left with maybe 2 or 3 pips if it retraced on you right there. So that's a lot to lose, that 10 pips. And, oh my gosh, somebody coming to the door. Bo, take it easy. I can't believe it. We have 3-foot snowbanks on the sides of the roads. We just had 2 people, runners, go by. That's dedicated. I live up on a small mountain in the Lakes region of New Hampshire, and they're not easy climbs. And to do it in the snow in the winter, I don't know. But if you float your stop too soon after the price goes through the profit target, you're liable to lose far more than the work it took you to gain that amount of profit to start with. So where do you float that stop? Well, that's a conversation for a class, a course, or maybe a full video. The point is, should you, as a day trader, make position trades? Yes, because your day trade, well, I can't say your day trading experience prepares you to take long-term position trades, because it probably doesn't. If you learn, it is my position that if you learn how to day trade, you can swing trade, you can long-term position trade, and with enough experience, you could even drop back and scalp. But if you are learning how to trade, or you are primarily a long-term position trader, or you learned a position trade, then you are incapable of doing day trading or scalping. It just isn't in your DNA. And that's why so many people say that day traders are crazy, is because all those people are position traders and they can't do it. They see that they think there's too much noise or whatever. So you can't listen to a position trader tell you whether you should position trade or not, because in their mind you should. In my mind, you shouldn't position trade as a primary vehicle in the Forex market. You want to position trade in stocks, well, that's what people do. They call it investing and not trading. But I digress. When you are skilled in your day trading process, and this fast track course is 6 weeks, it goes pretty quickly to get to the point where you understand the mechanics of order flow and how you judge the ability of price to move in the direction that you're going to bid ask in. Again, if it goes beyond your profit target to, you make up a number, 10 pips beyond profit target or whatever, and I mean, maybe that thing just is hovering around the profit target and you're getting ready to go to work, the last thing you want to do is walk away from work with an unprotected position. And so you would have to put a stop there. Where are you going to put the stop? I wouldn't put a stop. I'd close the trade out. You're 8 pips up, 10 pips up, whatever it is, it closed the trade. Because the price hasn't gone far enough beyond that trade to take on the risk of losing any part of that gain that you've made, let's say. You get 10 pips, you're doing good in it on a day. So to lose 7 of them because you put your stop in there and floated it too soon, that doesn't make any sense. So if you're sitting there and price has moved substantially beyond the profit target that you had, and you think with confidence, gee, this thing will probably move much further than where my profit target is, then you're going to want to set that stop, right? But not until then. That decision is going to be yours and your experience in trading, obviously. But once that price is at a sufficient distance beyond the profit target and you have to fold up the tent and go to work, then you can set that floater stop behind. Before you do that, you're going to have to do a re-entry analysis, because that's really what you're thinking of doing. The price has gone beyond your initial profit target. You had done your entry analysis and you had hit bid ask and taken that trade because your analysis told you that it should get to wherever that profit target is that you're fussing over right now, right? So when you are beyond the profit target and price is still moving, it looks like it's going to continue on, you have to do another analysis at that point. Now, you might not understand that, but in our fast track course, I teach that analysis rule has 4 conditions. It takes about 15 seconds to determine whether everything is satisfied. You make the determination, yes. You make the determination ahead of time as to what that condition is, how much further past the profit target have you gone? Was your profit target a 5-pip profit target, or was it a 15-pip profit target? That makes a big difference. So you have to manage the timing behind when you say, oh, I think I'll do another entry analysis on this to see if there is potential for that price to go maybe 50% further than at least than where my current profit target is, because you're going to have to, you can't set your stop 5 pips below the floating price at that time, because that'll tag you out right away anyway at your profit target if you set too close. So just take the profit target, close it out, and go to work. But again, it's about distancing. It's about your conviction and your metrics, trading metrics that you have as to how well you're judging these positions to say, oh, I think this is going to run another 50% or 200% beyond. Maybe you were trading on the backside of an NFP and things flopped around and all this stuff, and now you're in there and prices. We've seen that many times. It goes, for example, something will come out and it'll go way up like 50 or 60 pips, and then it'll come way down 40 or 70 pips, and then it'll go back up, and it'll come down, it'll go back up, and then it'll go back up to the 30 or 40 pips above right before the NFP came out. And so the market's saying, well, we believe that. We're going to continue to go up. You might be coming in on that and saying, well, I've survived this long after that NFP was there, and I'm right here to hit the trigger if price starts to stagger after I get 4 pips or 8 pips or whatever it is. Well, my profit target was 15 pips. I've hit the 15 pip level. I'm now 2 pips above that. I'm now 3 pips. I'm 5 pips. I'm 8 pips, whatever it is. Do I have the potential to go another 15 pips? And then if I float the stop behind that, I lose 5 or 8 or whatever it is. And now I'm back to, you see, you're into that judgment of, is the risk of going there with your floating stop in the event for some reason that stop doesn't get honored. It's not unheard of to have a gap in pricing. Gaps always fill, but that doesn't mean you don't have a gap. So you have to keep that in consideration, because if that price, because you're following not a volatile period, but a high momentum, a price action, order flow, you may get a very substantial reaction. And if your stop isn't hit, I mean, you could be out a couple of 100 pips by the time you get home. So you have to be very, very careful about the liquidity of the market that you're trading, the time of day that you're trading, the vehicle that you're trading, the distancing between where your profit target is, where price currently is, how far your profit target was from your take point. Those are the considerations that you want to ask yourself. And if you have been trained or you have the experience as a day trader, you've got, 300 trades under your belt, at least 500 trades under your belt, you've traded for a couple of years, then you're able to make those decisions as to whether you want to go and take a position trade. If you happen to have the day off and you're in that, then you don't have to take a position trade. You just hold the price and sit there. You know, go to the bathroom real quick, come back, another cup of coffee, and sit there and let that thing play out. And if it starts to weaken, you can get out after the thing comes back 4 or 5 pips. And instead of a floater of 15 or 20 pips below the price action, you're out only losing 3 pips or 5 pips. Those are distinctions between not only are you making a position trade, are you making a decision to take a position trade, which you would be doing if you did the reanalysis, continued to hold the position and set a floater. That would be just making that reanalysis decision, as opposed to if that price had gone way beyond the profit target and you were sitting there and either watching it or at that point just setting a floater behind it. You're not taking a long-term position trade. There's no need to do a reevaluation of your entry criteria because the thing is already proving that out on an ongoing basis because you're going to remain there in control of it. Once you decide you have to step away from the platform, that changes things. Then you do have to do a reevaluation. I hope that helped and cleared up the fact that just because you're a day trader doesn't limit you to all the other kinds of trading that's available. It's just a matter of gaining the experience in day trading and the right experience too. I mean, the fast track course that I teach is specifically geared to teach a methodology of process that can be applied to all of the time frame types of trading that you would like to be: swing, scalp, day, or position, or long position. So you have to look at yourself and see where you are in your experience level and in your confidence level as to, and you have a job, so you're going to have to either cut that trade off or set up floater behind it. Do you have the experience to make the decisions to take or don't take that long-term position? When once you make that decision, you have to feel good about it. I mean, the first couple of times you may get a little nervous, and you may want to be in a position where you do set the floater, but you are going to sit there and watch and see what happens so that you can judge the retracement volatility of price action. It's going to be different if it's after like an NFP release than it is if you're 3 o'clock in the afternoon, right? So base all that stuff on your decisions on the knowledge that you have about your particular currency pair and you yourself, what criteria you have been able to implement successfully from your experience in your general trading to be able to determine whether you should be talking in your head about letting the price go beyond that profit target that you had to work so hard to get in the first place, take that risk that the price reaction will come back and you'll lose 5 or 8 points of whatever profit target that you had. And you can't beat yourself up about that, because if you make 1 pip, you made 1 pip more than you started. It's just hard to sit there for 2 hours and make 1 pip and go, well, that was a productive day. But nonetheless, hey, if you have any questions about this stuff, as I always say in my videos, send me an email. I'd be happy to chat with you or set up even a video conference. No charge, no sales attempt to get you into fast track course. We'd love to talk with you and see if we could work out how you could look better at your particular situation to solve the problems that you may be having in your trading. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.